Welcome back, people, to another trade recap. And in today's video, I'm going to be going over how I am up a total of $2,121 off of one win today on the markets. And I'm also just going to be going over how the market conditions are looking right now, why the markets haven't been producing that clean moves lately, and what the markets are potentially going to look like for the next few weeks. So getting straight into it, here's the trade I took today. It was just a simple trade. I mean, it's a bit cliche that I did end up hopping on the markets an hour and 10 minutes after they opened because I forgot that the clocks moved back in America, but I still capitalized on the markets. Currently, I'm on 3 fresh Express accounts because I ended up blowing the ones that I passed last Friday, which is unfortunate, but you've always got to just put your losses behind you, learn the lessons, keep it in the back of your head and just push forward, taking one step in front of the other. And that's exactly what I've done. Last night I ended up passing these three combines, which has led to us being on Express accounts now, and thankfully hopped on the markets today. Within like 20 minutes I found a bias, hopped on, hit a nice little 1 to 2.73 securing. I don't know how much that is. That's like 1.2%, which is great. But anyway, I'm not here to brag. I'm not here to do none of that. I'm just here to give my thoughts and my analysis of how I capitalized on today's markets and what to expect in the future. So if you guys have just been on the markets, I mean, obviously you probably have, but just saying that, you can see that price has been absolutely dog shit for the past few weeks. It has been drawn towards sell side liquidity, obviously, but it has not been clear or clean moves to the downside. And that is purely just, maybe it's because price will never move as easy as you think. Maybe it's because you have some absurd expectation of how price is going to just distribute to the downside, sweeping out the predetermined drawn liquidity. But realistically, the markets move how they're going to move. It's just our choice how we capitalize on that. So fishing out a bias for the past few weeks that has now been filled, we can understand that we're in a downtrend. What represents a downtrend? Market maker sell model and market maker buy model. Price is not drawn to all-time highs because we've already got an S&T with all-time highs holding. Price has accumulated sell-side liquidity throughout this whole consolidation range here, and obviously we've already got this significant low resting here. Price comes to the upside.
Closed.
Fuck, that made me jump. Fuck, I need to regain my bearings. Price is always going to move to buy side or sell side liquidity. The market maker buy model will be completed when this high gets taken. The market maker sell model will get completed when this low gets taken. In the past few weeks, we have been in a downtrend because we've accumulated orders to the downside. We've manipulated to the upside, sweeping out a previous month's high, but then rejecting off of a all-time high S&T. And then we've distributed to the downside, breaking a weekly chain of state delivery. Now, we have been bearish for the past few weeks. It is obvious. I mean, price has been failing to produce swing highs, as you can see in situations like this. What do? We are sweeping out buy side liquidity and moving to the downside. We are sweeping out buy side liquidity and we are moving to the downside. We are sweeping out buy side liquidity and we are moving to the downside. This just shows a downtrend because we're failing to move higher in the markets. Whether we break this 4-hour chain in state delivery, whether we continue our trend to the upside internally, it does not matter because we are sweeping out buy side liquidity and rejecting to the downside. That's how I move. That's how I get a scope on how these markets are moving. And today, you might be annoyed that you understood price was drawn towards November's low and previous month's low. And you might be necessarily annoyed because price just shat the bed instantly, swept out the very clear draws on liquidity, and you couldn't make any money off it, nor could you get in on the action at all. But just know, there's always another day on the markets. The markets are going to move how they're going to move regardless, whether you're part of the move or not. The markets don't care. You just have to be there for when they do move and when it does look good. So why have I mentioned how the markets have been moving? It is because good times are ahead. There's light at the end of the tunnel. Price has not been clear. Price has not been moving cleanly because internally we have been fishing higher in the markets. That might look like, let's say in this range here, we've already got stacked lows below. We've got previous month's low, November's low, and we got this previous day low on the table. When we open up the range here, and there's all of this sell side liquidity built up in the chart, as well as our external draws on liquidity, price may show signs that it's going to the downside, but internally we've got all of this buy side liquidity. Now, what this actually means on the markets is that indefinitely price is drawn to the downside because we are in a market maker sell model. As I said earlier, we've produced our power of three. We've produced our accumulation in the markets, our manipulation in the markets, and our distribution in the markets. We're just waiting for that distribution leg to be fulfilled. So what does this look like for the next few weeks in the markets? Now that price has ended up sweeping out November's low, i.e. filling the market maker sell model, don't worry, I'm going to get into the trade recap in 1 minute. Now that price has filled this market maker sell model, or it has completed it, now we're going to look for buy side moves. Whether it be internally, whether it be externally, we're looking for buy side liquidity to get taken because although we are still in a weekly bearish range or whatever, weekly bearish trend, buy side liquidity is a very, very, very strong possibility now in the markets. And especially the fact that there is an S&T holding with November's low, same shit, like you kind of want to see a bounce to the upside. But regardless, how did I capitalize on today's markets? So I'm actually gonna like bookmark that so that you can select what time you want to watch this these clips at, so that you can select whether you want to watch the trade recap or my overall analysis on the market. But hopping on the markets today, what do we understand off of market open? Market open has swept out previous week's low. It has swept out previous month's low, and it has swept out or completed the market maker sell model. Now, as I said earlier, as soon as the market maker sell model is complete, that is when we can look for buys on the chart. That is when we want to align our internal draws on liquidity with our external draws on liquidity. So, fishing out a bias on the morning. Price has swept lower, put in an S&T with the market maker sell model completion, and it has rejected to the upside. Upon rejecting to the upside, it has produced and left behind Asia low, London low, and a 4-hour for value gap. Now, it is pretty funny that I hopped on the charts an hour and a half late, but it's the same shit. Like, we're in a buy trend. We have got a massive new week opening gap. We have wicked into the opening gap range low upon 9:30 open, but it's not a clear closure above. It's not clear displacement above this high. This high is still intact, and we have yet again produced even more buy side liquidity and more reason to move to the upside. So upon market open, obviously I wasn't on the charts. I hopped on the charts around here, but I was still fishing around a bias until like here. Price ended up tapping into this 4-hour for value gap on ES. On NQ, it clearly did not, which created an internal S&T on the 4-hour time frame. After ES has swept this low and rejected higher, breaking structure on the 1-minute time frame, coming lower again, sweeping out all of the break-evens here, moving to the upside again, returning lower, sweeping out all of the break-evens in this range, sweeping higher again. It is very clear on the charts that price does have targets to the downside. It has got lots of low resistance liquidity internally here, lots of low resistance liquidity internally here, as well as already having the session low, Asia low, London low, whatever. We've got clear sell side liquidity targets, but we don't want to act just purely off of where we think the market's going to go. We want to see what the market's showing us. The market is showing us that we have swept out previous month's low, previous week's low. We filled the market maker sell model. We have rejected after putting in an SMT with the market maker sell model. We have got clear distribution to the upside. We want to see a continuation up to the new week opening gap. So how did I capitalize on this? So I waited on the 15-minute chart to see pure distribution to the upside. You don't want to be trading in a range like this. You might get an entry down here. You might get an entry somewhere within these lows here. But honestly, at this point in the chart, I was still trying to fish out a bias because we were clearly in a chop. But as soon as price broke to the upside, I go to the 15-minute time frame, or I actually go to the 5-minute time frame. I mark out not one fair value gap, but I mark out 2 5-minute fair value gaps. I then go to the 15-minute time frame. I can see that price has wicked into this 5-minute fair value gap and it has rejected tapping into this 5-minute fair value gap. It has put in an internal S&T with ES. I can see that price is going to produce a brand new 15-minute fair value gap as soon as we close this 15-minute candle. So as you can see, this candle is at 10:56. That means that at 11 o'clock, a new 15-minute candle will get produced, and this low will be the opening to that 15-minute candle. So I hope this is pretty easy to understand, but I'm just basing price off of the fact that we have displaced out of the range, we have rejected, or we have created potential sells because people are thinking markets are going to be drawn towards this 15-minute fair value gap, and their orders are all sitting above this high. And obviously we're targeting the new week opening gap high already. And yeah, this might be really technical, but I'm going to try and explain it in the simplest terms and in the quickest way I can possibly do. As soon as I understand that price is going to open up a 15-minute fair value gap and that orders are going to be filled around here and their take profits are going to be here, I understand that price is in an uptrend. Internally, externally, whatever, we're in an uptrend. So we're just looking for buys on the charts. Price ends up rejecting the 5-minute fair value gap, coming back into it, rejecting it, coming back into it, rejecting it, closing above this 1-minute change in state delivery, or just presenting us the key conviction towards price being internally drawn to the upside still. So as soon as price comes to the upside and then comes back down and shows clear signs that this change in state delivery level is getting respected, I ended up entering the markets here, putting my stop loss at the most recent internal low. My take profit is at the new week opening gap high. Could I have taken profits at some point in the charts? 100%. Did I want to? Not really. I was pretty confident with my draws on liquidity, pretty confident with my conviction behind the trades. As soon as this level in the markets got swept, I was going to go break even, and even if I did do that, I still wouldn't have been tapped out. But as soon as price came to this point up here, I did end up moving my stop loss to break even. So I entered the trade off of the fact that we were holding a 5-minute fair value gap. We put in a 1-minute internal S&T. We had retraced into the 5-minute fair value gap and rejected off it, showing clear signs of an internal continuation to the upside. We broke 1-minute structure. We rejected going lower. I entered the market and we hit a nice little 1 to 2.73. Obviously this isn't the exact executions, but it was a great trade. I mean, I have no FOMO of the fact that I missed out on this whole move because I don't give a shit. I'm just here for my piece of the pie. So hopefully that was not too over technical. It probably was, but regardless, I'm trying to explain my exact thoughts and hopefully I did exactly that. So I hope you guys enjoyed this video. I hope you learned something from this video. I mean, that's what it's here for, whether it be enjoyable or not. I hope you learned something from this video, and I'll see you tomorrow.